Indian rupee just crossed 96 rupees against the US dollar. And this is the 7th consecutive day it has hit a new record low. What does that mean for you? Higher EMIs, costlier petrol, more expensive gadgets. Your pocket is already feeling it, and it could get worse. Stay with me, because today I'm going to break down exactly why this is happening and what you should do right now to protect yourself. Welcome back to the channel Lehoti Ki Hai, where we simplify money and finance for every Indian family. If you are new here, hit subscribe and turn on the bell icon so you never miss a video that could save you money. Let's start with the facts. As of May 19th, 2026, the Indian rupee settled at 96.53 rupees per US dollar, a fresh record closing low. During the day, it even touched 96.61 rupees. Now here's the bigger picture. In 2026 alone, the rupee has already depreciated by nearly 7% against the dollar. That makes it the worst performing currency in Asia this year. To put it simply, a dollar that used to cost you 90 rupees now costs you over 96 rupees. That difference, it's coming straight out of your wallet. So why is this happening? Let's break it down. The single biggest reason is crude oil. Tensions in the Middle East, particularly involving Iran and the West Asia region, have raised serious fears about oil supply disruptions through the Strait of Hormuz, one of the world's most critical oil routes. As a result, Brent crude oil has surged past $107 per barrel. Now, why does this hit India so hard? Because India imports approximately 85% of its oil needs from other countries, and all of it is paid for in US dollars. So when oil prices go up, India needs to spend more dollars. More demand for dollars means the dollar gets stronger and the rupee gets weaker. It's that simple. Expensive oil equals weak rupee. The second major reason is coming from the United States. Inflation in America rose to 3.8% in April 2026, a 3-year high. This means the US Federal Reserve is keeping interest rates elevated and is in no hurry to cut them. In fact, markets are now pricing in a 31% chance of another rate hike. When US interest rates are high, US Treasury bonds offer attractive returns. So global investors think, why take risk in emerging markets like India when I can earn safe, high returns sitting in America? They pull their money out of Indian stocks and bonds and move it back to the US. This is called foreign portfolio outflow, and it puts massive selling pressure on the rupee. US 30-year Treasury yields have already crossed 5%, which is drawing billions away from markets like ours. Now let's get personal, because this is what really matters. A falling rupee is not just a number on a screen. Here is how it directly impacts your daily life. First, petrol and diesel prices will rise. Oil is purchased in dollars. A weaker rupee means higher import costs, which eventually reach the fuel pump. Second, your home loan EMI could go up. If inflation rises because of higher oil prices, the RBI may be forced to raise interest rates, making your loans more expensive. Third, electronics and gadgets will cost more. Smartphones, laptops, televisions, most are imported and priced in dollars. Fourth, if your child studies abroad in the US or UK, you are now paying significantly more in rupees for the same fees. And fifth, overall inflation will creep up, making everyday household items more expensive. In fact, analysts warn that if crude oil stays above $100 per barrel, India's GDP growth could fall by up to 1 percentage point. Okay, so should you panic? Absolutely not. But should you be smart? Absolutely yes. Here are 5 practical things you can do right now. Number 1, avoid big import purchases in a rush. If you're planning to buy a laptop or imported gadget, wait a few weeks and watch whether the rupee stabilizes before spending. Number 2, if your child studies abroad, explore forex hedging. Ask your bank or a forex platform about forward booking. It locks in today's exchange rate for future payments. Number 3, hold your gold investments. A weak rupee makes gold even more expensive in India. So if you already own gold, its value in rupee terms is going up. Number 4, do not panic sell your mutual funds. This is short-term global volatility. India's long-term growth story remains strong. Both Morgan Stanley and Goldman Sachs project India's GDP to grow at around 6.9% in 2026. Number 5, keep all your financial documents organized. Your LIC policies, fixed deposits, insurance renewals, have everything in one place so you can make the right decisions at the right time without scrambling. The rupee's fall is a global story, driven by oil prices, US interest rates, and international capital flows. But the impact is very local and very personal. The good news, when you understand what's happening, you stop being a victim of it and start making smarter decisions. If this video helped you understand the rupee crisis better, please give it a like. It helps more people like you find this content, and share it with your family and friends who need to hear this right now. Drop a comment below. Which impact of the rupee fall concerns you the most? Petrol prices, EMI, education costs? Let me know. Coming up next, FD versus gold versus mutual fund. Where should you put your money when the rupee is falling? You don't want to miss that one. Subscribe, hit the bell icon, and I'll see you in the next video. Stay informed, stay financially strong. See you soon.